it is a blowout. Take a look at that number. The U.S. saw a huge job gain in January, with payrolls jumping 467,000, completely surpassing the estimated 125,000. The unemployment rate ticked up to 4% from 3.9%, and average hourly earnings also jumped. So there's a lot to break down with these numbers, and let's just get to it for our quick take focus of the day. Chanel Bassick, as always, is joining me now, as well as Mark Hamrick, senior economic analyst at Bankrate, and also Bloomberg's Caroline Hyde, live in New York for us. Thank you all for being here. Mark, let's just start with this. Is this just hot heat? Is this the job market is back and booming?
It does appear to be the case. I think about the fact that it's very often the job of prognosticators heading into the Super Bowl to talk about their very strong confidence that it's going to be a great game, and how many times do those games turn out to be completely different. We have to play the game. We have to see the report. And that's what we're doing this morning. And really, as you say, being blown away by the strength of it. I think you first gravitate toward not only the January showing in payrolls, but the very strong upward revisions in the previous 2 months. An improvement, thank goodness, in labor force participation, still shy of pre-pandemic levels. And of course, wage growth, not keeping pace with that 7% year-over-year gain in the CPI, but getting closer. We're not seeing workers make as much as they need to make to keep pace with inflation at the retail level. And of course, the Federal Reserve, which has a meeting after the following monthly jobs report. But if they needed some added confidence that the path is clear in their view to raise interest rates at that March 16th meeting, this report helped them a great deal.
It's interesting that labor force participation rate, Caroline, is a much harder to understand number. And I look over to what Megan Green of Harvard had said, and it's that if we could figure out why workers dropped out of the labor force, we can figure out how to bring them back. And so even though we saw a tick up, what does it mean to have a number that's lower than where we were before the pandemic?
I mean, it's still showing that there's work to be done. Now, the labor participation rate, in particular for women, was encouraging. We're starting to see that back at a 22-month high. We know that schools are reopening. Yes, the Omicron variant has made that difficult. My son's school has been shut all this week, for example. However, slowly but surely, perhaps more women are coming back into the workforce because they feel that there's more of a support there from an education perspective, a childcare perspective. But also we have seen the stimulus drawn back that somewhat. So maybe that's why we start to see participation, people wanting to get back into the workforce. But I think the only area of concern with me for these numbers, and remember they're murky numbers, the ADP number was awful. Many had said, look, this will look brighter because if you took a week off, that doesn't actually count within the ADP numbers as long as you were there for the first week or so at the start of the month. However, the black unemployment rate looks ugly to me, and you're still seeing, 6.9%? That's double where white unemployment is. So there is a level of participation that we still need to get people who want to get back into the workforce, clearly who do, and people of color who aren't getting there yet. But participation rates are slowly pushing higher, and I think that's a lot to do with the fact that we feel that much safer. We're starting to understand the variant more. People are getting boosted, getting vaccinated.
And Caroline, you bring up a really great point, Mark, that I actually wanted to throw to you. Considering what Caroline just said about there's still some participation that's a little bit low, and considering what we heard from the Biden administration earlier this week, warning that this was not going to be a good number. I mean, what is their messaging now at this point in time?
I think it would be consistent with what they said in the past, and that is, hey, I'm the president, and look at all the jobs we've been creating. And of course, in a highly politically polarized society, there's going to be a good chunk of the populace that's not going to hear that and won't want to listen to that. And that's the world we live in. But they're good at figuring out what their message needs to be and what they want it to be. And that can sometimes correlate to what we're talking about, and sometimes it can diverge from that. I do want to say one thing about the labor force participation rate, and that is, we almost have to pinch ourselves to remember now that we're now getting into this third year of the pandemic, and there are all kinds of reasons to be hopeful that we move beyond this, but the end of the pandemic has not been declared. And so I think you have to get to something like that point before some people are going to feel the confidence that they can go to public-facing jobs. And oh, by the way, you're getting paid more in many jobs now to do just that. And employers are going to continue to see that light because there's that gap between what's happening with wages and inflation. And until inflation comes down, and obviously we hope and believe that there's some reason to believe that that will happen, the wage gap is something they're going to have to make up, along with providing better working conditions when that's something that they can manage.
The wage gap, and also I want to get back to this disparity point Caroline was making, because Black Americans, 6.9% is still the unemployment rate. For white Americans, that's 3.4%. And for Hispanic Americans, it's still quite high too. It's 4.9%. So Caroline, when the Fed is balancing inflation and the job force, are people going to be left behind?
Well, this was exactly the focus of Chairman Powell before inflation sort of got out of hand. The focus was run this market hot, run the economy hot, so that you can have a more inclusive labor force. Of course, they've had to put that one side because inflation in many ways hits those at the lower economic part of the equation the hardest, because of course food inflation, gas inflation becomes that much more pertinent, and that backtracks, of course, a lot of the equality that we want to see. But it is important that they continue to focus on it, and I'm therefore encouraged to see the likes of Lisa Cook being put up for a Federal Reserve place, the first Black woman that we see on the Federal Reserve. We will start to get not just a diversity of, well, what people look like, but their thinking, the work that she's done in terms of the scarring that racism in the United States has done to the economy, the fact that you have other members of the Federal Reserve coming on board who have also done a lot of in-depth study onto inequality and why it exists. But I think there does need to be a continuing thought process of how we become more inclusive. That might be a question more for the federal government. Is it more about ensuring that those who've been incarcerated are able to come back into the workforce and are easier to employ? Because we understand that that's in large part why there is a higher Black unemployment rate than a white unemployment rate. But what are they also doing to encourage, well, wage inflation at the bottom end so that you can make people want to go back to work and indeed not have the wealth gap, or indeed, you know, the poverty struggle that they have of if they go back to work, well, then what about the cost of care for their children?
And Mark, when will we know if we are sort of heading in the right trajectory in terms of sort of closing the wage gap and you know, increasing equality across the board as this job market apparently appears to be heating up a little bit?
Well, we'll know when we get to see the data that affirms that. And, you know, we see that in our bank rate surveys as well. One very positive thing that we found very recently, as we've done the survey for the better part of a decade now, we asked Americans in what position were they to pay an emergency expense of $1,000 or more. 44% said they could do that using savings alone. That means the majority of Americans cannot. And you say, you know, OMG, that's pretty lousy. It's actually the best we've seen in 8 years. But to the earlier point about what may compel people to go back to work, as was mentioned earlier, we now have fiscal stimulus essentially ending. We will see what happens with parts of Build Back Better, but you know, I don't think the odds are great that we're going to see large swaths of that approved, given what's going on or not on Capitol Hill. And so, primary means for people to drive their income now is going to be work and not being able to rely as much as they were before on fiscal stimulus.
And Jen, I think it's interesting the wage inflation point that we just been discussing. This is also not a particularly clear number for the month of January, because we know that a lot of people who were dragged out of the workforce because of health problems, in large part were, well, frontline workers, and there were people who are therefore paid at the lower end of the scale. So there's going to be a slight mismatch in terms of actually the wage inflation probably looks stronger than it is, because a lot of those who were paid lower had to come out of the workforce for January.
So could we go ahead?
Yeah, to that point, you know, you saw leisure and hospitality jump back, but there was little change in a lot of different sectors. I mean, little to no change in mining, construction, manufacturing, information, financial activities, and other services. I mean, Mark, are there just parts of the economy that are not coming back?
You know, I don't think coal's coming back, but you know, I think that the primary concerns continue to be this mismatch between the near record number of jobs that have been open and the workers who are available or compelled to fill them. And that's the challenge for industry and employers. It's a challenge for those to retain their current workers and to attract new ones. And you know, I've been hearing from the housing industry for the better part of a decade about their structural challenges that include the fact that they don't have enough workers, and of course, inflation has exacerbated their headaches. Manufacturing needs more workers. We have a supply chain problem across the globe. And so these are things that are going to take time to work out, and I'm less optimistic about the supply chain issue now than I was just a few months ago, because it does feel as if these problems are persisting longer than we had hoped.
Certainly, and we're actually going to continue the conversation of labor shortages, talking about the education sector in just a few minutes, but we're going to leave it here for this first segment. Thank you guys so much for joining us. Senior Economic Analyst at Bankrate, Mark Hamrick, and also Bloomberg's Caroline Hyde in studio for us. Thank you so much for your time.